What's up everybody? Welcome to the Stocks channel. My name is Corey, and in today's episode we'll take a macro level view at the indices. We'll also take a look at the Russell 2000, the VIX, and Bitcoin. So first up, let's take a look at the S&P 500 SPX index. So let's crack open this chart and see what's going on in the stock market today. Alright, so looking at the SPX, every candlestick you're looking at represents one entire week's worth of price action. So we can see the S&P 500 did close at a brand new all-time high. And again, we still have a very strong bull market in the S&P 500. All of these moving averages are very positively sloping, and they all have really nice separation, which means the S&P 500 is still in full bull trend mode. Remember, I always say when a market is in a bull trend this strong, the bull will not die easily, and we've seen plenty of scares where we've seen dips in the S&P 500 only to see buyers stepping in and driving it to brand new all-time highs. So we're getting into the typically more volatile months of the year going into August and September, so it could be yet again another bumpy ride as we continue to climb higher towards our next price targets. The next price targets on SPX will be at 44.88, and above that we're looking at 46.05. At this point in the year and looking at the technicals, it does look like the SPX is well on its way to 46.05 or potentially even higher, because we still have a very strong bull trend and we still have the potential for another pullback before we go for another leg higher. So look for that possible price target at 44.88 to trigger the next pullback. But remember, that pullback will likely get bought up and we will likely see another leg higher that could take us to SPX 46.05. So that seems like a great price target for the year for the SPX, because we are getting close enough to the end of the year to now start predicting where we're going to end up. But as far as the Bollinger Bands go, we still have plenty of room in the upside of the Bollinger Band on this weekly chart to get to that price target at 44.88. And remember, these Bollinger Bands will expand every single week. So from last week's close to our next price target, we have just a little over 1% until we get there. And from last week's close to the next price target is a little over 3.7%. So we're well on our way to hitting these price targets. And I always tell you, the higher we go, it's time to start locking in some profits and don't get overly greedy, because it is possible we do see a pullback or even a stock market correction after one of these levels are met. But overall, looking at the technical trends on the weekly chart, we have no concerns in this bull market. We're not testing any critical supports at this point, and we're still well on our way in this bull trend to hitting our next price targets. You could see the upper Bollinger Band will allow us to get to that next price target as soon as next week, knowing that these Bollinger Bands will continue to expand. And we can see the Bollinger Bands are in full trend mode because we see a positive slope on the upper Bollinger Band and the lower Bollinger Band. In the event we do get a volatile wave of selling, remember that our 20 simple moving average is our strongest support, and that's sitting down here right around 42.32, and it's continuing to climb each and every week. So looking at this market, this is not the time to be a bear. Eventually this market will roll over and we will see a massive correction. But right now, if you're trying to predict when that's going to be, you're just guessing, because there's nothing in the technicals that tell us that we're due for a correction. And there's always the possibility at one of these price targets, it does trigger a pullback. Jumping over to a monthly chart of the SPX, we can see that we have plenty of room in the upper Bollinger Band. The price action is well over the 5 EMA, and we still have a very strong bull trend. You can see that this has been a very strong bull market since the crash in March 2020. And we've only printed 3 red months during this entire run. So believe me when I tell you that the next stock market correction will be a doozy, and it's very likely we're going to come back down to the breakout level. Again, you don't want to guess when that's going to happen, but when we do see a correction and we do start to see the market rolling over, it's very likely we're coming down to this trend line of support to retest that breakout as support. When that time comes, let's just say we get to 46.05 and trigger that correction, that will be about a 16 to 20% correction. That sounds like a huge drop, but it's really not that bad considering how strong this bull rally has been, and all bull rallies eventually need to correct before they can go through another leg higher and continue to climb. So eventually we will see a 10 to 20% correction in this market, and how much we drop during the correction is going to depend how high we go before we see that stock market correction. Remember that a bull rally this strong, you don't want to short because you're trying to call a top. But it does mean that the higher we go, the more likely we will see a deep correction when the time finally comes. So this is definitely not the typical norm to see this many green candlesticks on a monthly chart. So do understand we're in unprecedented times, and this is still a very strong bull rally. Jumping over to the NDX weekly chart, we can see that we closed the week right near that previous all-time high on the weekly chart, and our next price target is just above at 15,272. That price target is well within the upper Bollinger Band, so it's very likely we're going to get to that price target soon. And from this week's close to that price target is about a little over 1% to the upside. We do have another price target above that at 15,985. and from this week's close up to that price target is a little over 5.7% to the upside. Now that price target is very likely because a lot of the big tech companies do look like they have another leg higher. If you look at a chart of Tesla, for example, it looks like its bull run is just now getting underway and it has a lot more upside. So there's no reason to try to call a top in this market when we see so many powerful market moving stocks continuing to look like they have more upside. We saw AMD breaking out to brand new all-time highs, and we're very likely going to see Nvidia doing the same exact move in the very near future. So while all of these big tech companies are continuing to blast out and break out and go to brand new all-time highs, is not the time to be trying to call a top in this market. The NDX easily looks like it can get up to about 16,000, and we will continue to see these Bollinger Bands expanding, allowing the price action to continue to climb. We have a very strong bull market in the NDX, and the price action is still well above the 5 EMA. And again, this is a very strong bull market, so even in the event that we do get volatility and we do start to see selling, it's more than likely we'll see the dip getting bought up for that next leg higher. The critical support for the NDX is down here just over 14,000, and from this week's close back down to there is just about 6.6% to the downside. Again, we're not assuming that we have to dip down there, but if we do start to dip, you're looking at anywhere between a 6 to 7% drop before we're at very strong support, and we see buyers most likely stepping in and driving the stock market higher yet again. On a monthly chart of the NDX, we can see that we're well within the Bollinger Bands for our price targets, so there's no resistance that we're going to get from the monthly Bollinger Bands. Price action still well above the 5 EMA, and we still have a very strong bull trend on the NDX. You can see the NDX has had a lot more red candles compared to the S&P 500, and that was because we did see that sector rotation out of tech, and now we're starting to see money coming back into the tech sector, which does mean the tech sector could continue to outperform, and we could have no trouble getting to our price targets. So with a bull market this strong, you don't want to call a top, and you just want to continue to let the trend be your friend and be objective and stay on the direction of the trend. As long as the trend is this strong, you need to remain a bull and you need to look for buying opportunities off of dips and off of critical support levels. On our bear bull survey, we can see that we have 36% bulls, 32% neutral, and just about 32% bears, so this is still the Goldilocks ratio. We don't see too much greed and we don't see too much fear. We really just see an equal 1/3 split in each of the camps. So as long as the market sentiment is split like this and we still have such a strong bull trend, it's more than likely going to increase the probability that we continue to climb higher. When you have a strong trend, you know the price action is likely going to move in the direction of the trend, and we don't have extreme greed readings, so there's no reason to believe that this party is over just yet. When you see people in the neutral or bear camp, that likely means they're shorting or they're in cash, which only increases the probability of short squeezes or money coming in off the sidelines driving the stock market higher. So if anything, the bear bull survey is confirming our thesis that we're likely going higher in the stock market. Jumping over to the Dow Jones weekly chart, we can also see the Dow Jones closed at a brand new all-time high, and we still have price action over the 5 EMA and a very strong bull trend. You can see the Bollinger Bands are starting to squeeze, which does increase the probability that we're going to see an explosive move in the very near future. We're seeing volatility contracting, which means we're likely going to see an expansion of volatility in the near future. So looking at the Dow Jones, there's no warning signs that the market's rolling over when we're closing at brand new all-time highs and we're still maintaining a strong bull trend. On the monthly chart of the Dow Jones, you can see the Bollinger Bands are expanding much more than the weekly chart, and the price action still over a positive sloping 5 EMA, and we're still in a very strong bull trend. You can see the Dow Jones has lots of green weekly candles, and it does mean we could continue to climb higher before we get that stock market correction. On the Russell 2000 weekly chart, we can see the Russell 2000 is still going sideways, and we've tested critical support numerous times, and we continue to see that critical support holding up. We haven't had any closes below our support trend lines, which means we're seeing buyers stepping in at that level. We don't have a bull trend, and more than likely the market is still going sideways in the Russell 2000 because we don't have a bear trend either. So we don't see trending in the negative direction or the positive direction. We really just see the Russell 2000 chopping sideways and going nowhere. Now that will likely change in the very near future because you can see these Bollinger Bands are getting very tight, which does increase the probability we're about to see an explosive move. We haven't seen the critical support breaking down, and we could be very likely coming up to retest critical resistance in the very near future. So we're either going to break out and start running to the upside, or we're going to see the Russell 2000 getting rejected and breaking down below support and starting to fall to the downside. So either way on the Russell, there's no trend in either direction, and we're just chopping around waiting to see if the Russell 2000 is going to break down below support or break out above resistance. On the monthly chart, you can see a little bit of a different picture, and you can see the Russell 2000 is still in a bull trend with price action above the 5 EMA. You see the Russell 2000 was way too parabolic, and it's just consolidating those gains, correcting through time, and it does mean the Russell 2000 could still likely break out to the upside. You could see the monthly chart has plenty of room to the upper Bollinger Bands, and we still have a very strong bull market that's just consolidating some of those gains from back in early 2021. So look for the Russell 2000 to potentially make a massive move in the very near future. On the VIX weekly chart, we can see the VIX is still in a bear market and we still have a lot of bearish trending, and the VIX continues to get rejected at that 50 weekly EMA. It looks like the VIX is well on its way back down to the low 14s, which would go hand in hand with our higher price targets, because low fear and a low VIX increases the probability that the market will climb higher to all-time highs. Remember that a low VIX implies low volatility, so we could see a very boring melt-up market that just climbs higher on low volume because we don't see any fear or massive selling. So as long as the VIX is heading lower, look for the stock market to head higher, but do understand volatility will start contracting and we will see a much more boring market that could just kind of chop around and slowly drift higher if we don't see that massive wave of selling coming soon. On the other hand, if we see the VIX spiking out and breaking above about 20, that would increase the probability that we are due for that stock market correction and we're about to see a lot more volatility. So watch the VIX closely because it is at a very important point where we're going to see brand new all-time highs or we're about to see a stock market correction. On the Bitcoin weekly chart, we can see we're finding resistance right around that $45,000 level, which is also the 20 simple moving average on the weekly chart. We are seeing a little bit of an increase in volume as we're breaking out of that support level, which was right around 30,000. So right now, Bitcoin does look like it could be trying to break out and go back into a bull market, but you can see Bitcoin really needs to get back above about 45,000 and rebuilding a bullish trend on the weekly chart. I do have a price target up here at 51,000, and if we can break out above that, it will look like Bitcoin does want to go back to brand new all-time highs. So watch those resistance levels at 45,000 and that price target at 51,000, and if we break out, we could really start to run to brand new all-time highs. And you can see I do have price targets up here at 67,000 and right around 75,000. If I were to take a bet on Bitcoin, I would bet that we are going to see brand new all-time highs this year. But again, this is a very speculative asset and you never know exactly what's going to happen with Bitcoin. But overall, that $30,000 support level did hold up like a champion, and that was where you wanted to accumulate Bitcoin if you did want to go in for the long haul. If we come back down to that level, it would be another buying opportunity, but it increases the probability we'll eventually break down through that level and come back down to 27,000 or 20,000. So watch those critical support and resistance levels because Bitcoin is going to tell us very soon which direction it's going to go. On the monthly chart of Bitcoin, we can see we never lost the bull trend and the price action is back over the 5 EMA. So overall, this just looks like we were correcting that massive parabolic move and now we're ready to continue to climb higher. As long as Bitcoin is over about $35,000, it does look bullish and it does look like it wants to continue to climb higher to brand new all-time highs. So watch for that in the near future and watch that critical resistance at 51,000. So jumping back over to the S&P 500, it definitely looks like this stock market does not want to stop here and that we are going to see prices all the way up to SPX of about 46.05. Look for a bumpy road as we get into the 44.88 range and we could see a pullback from that level before we can climb higher to the 4600s. Remember that August and September are typically more volatile months and we could see a lot of sector rotation and a much more bumpy ride. But overall, as long as we have the bull trend, it's very likely we're going to continue going higher. And on my daily analysis that I do Monday through Friday, you can see that we also do have strong bull markets. So the macro analysis is aligning with the daily analysis that we're going to continue to climb higher from here. Also remember that I have my own trade alert service called BANC Trade Alerts that only trades TQQQs, and it does very well in all market conditions, but exceptionally well in volatile markets. From our data in the last 3 years, we averaged 7 trade alerts per month in August and September, which means in the next couple of months, we could see a lot of volatility. So if you've been thinking about trying out BANC Trade Alerts, now could be the best time to try it out. And I'm currently running a 50% off promo code for your first month. You can find out all of the details about BANC Trade Alerts in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Discord trading community, you can find out how to join by clicking on the link in the description. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.